symbols of prosperity, contentment, and perhaps also hanging in the balance your future freedom. They are regularly, even now, staring you in the face at the local bulk buying warehouse in the United States. Dear Normie, you'd better figure it out quick, because the wealthy increasingly already are. But most, sadly, are still asleep at the pushcart, rolling onwards to Upton Sinclair's $1.50 hot dog section 2025. What a deal. I saw a kin in a dystopic black comedy once. Overworked, undereducated by systemic design. And how did it go again?
Welcome to Costco. I love you. Welcome to Costco. I love you. Welcome to Costco. I love you. Welcome to Costco.
That's right, idiocracy. Precious metals continue to drive higher with another excellent week of trading. What's more important is the expansion of the mainstream financial media's understanding as to why this is happening.
People, we talk about the price performance and percentage terms up 30%, but it's really difficult to get my head around the idea that gold started off the year trading at 2,600. We're now very close to 3,600, 3,500 thereabouts, all-time record highs. And yet you remain bullish on gold. What is going to drive the next leg up from here? We've already rallied so much.
Next few months, we clipped 3,600 an ounce gold spot today, late this afternoon. India's finance minister was out this week describing the ongoing bullion over U.S. bonds trade that mainly has been an emerging market government affair, and as well as India. It's basically been running for about 3 to 4 years now, collectively, consistently buying official gold bullion reserves in record sizes never before seen.
Nirmalaji, India holds about $227 billion of U.S. Treasury securities. It also holds a lot of gold in its reserves. Should we diversify away from U.S. Treasuries for reserves?
To some extent, I think the Reserve Bank of India has already started doing it. I wouldn't want to divulge more by saying how are they doing it. But I think Reserve Bank has taken a very considered decision, and they've also done by purchasing gold. So I think the bank is competent and they're taking a fine call on it.
Goldman Sachs is now pounding the table with above $4,000 an ounce gold as their baseline target for the middle of next year, 2026. They are also suggesting getting long various commodity plays. The U.S. stock market hasn't in earnest begun to melt down in real value terms versus gold and or silver yet. But here's the 21st century scoreboard, and even if you take the S&P 500 and dividends reinvested into it throughout this entire 21st century, gold is handily beating that, and as well silver is right there neck and neck, probably ahead by now. This morning's U.S. jobs report came in low and well under anticipated figures. It was fiat U.S. dollar weakness that surely helped spur levered derivative silver algorithmic buying, at least this morning. The recent jobs report in Canada was even worse, while fiat Canadian dollar silver is now budding on the line of the seemingly ancient scapegoated Hunt Brothers nominal record price high of 1980. So not long from now, all-time breakout for silver is coming up north. Financial analyst Robin Brooks is pointing out this latest surge in gold is not so much about the ever-ongoing devaluation of fiat currencies, more so, for him, a question of the underlying debt assets that are unraveling as questionable assets to hold. Literally, it is the ongoing movement away from government debt assets, also known as bonds, that is currently driving this secular gold bullion bull market train for now. Now, this chart, again, is going to become a yellow line U-shape as the years proceed. And now, financial normies on Bloomberg, for instance, are beginning to figure that out as well.
Well, I think the big conversation there is to just put gold back on the map for a lot of investors. I mean, we've had conversations coming into 2025, 2024, where a lot of clients, a lot of investors were still kind of looking at it as a less interesting asset class. And of course, somebody sent me the Bloomberg chart yesterday of foreign central bank holdings of treasuries versus gold going back to the 80s. And for the first time since the mid 90s, foreign central banks are now holding more gold than treasuries. Wow. So this is a secular tailwind. This is a powerful shift, and it goes back to the kind of the roots of Van Eck, Austrian economics. When the fiscal deficits and debt gets too high, when monetary machine goes off the rails, gold is the safe haven.
So Ben, looking at your notes here, gold has doubled since 2023 and could double from here over the next 5 years. What's going on there?
So again, I think the big thing to keep in mind there, and we were kind of pounding the table on gold, not because we're gold bugs, but we just saw structural asymmetry in that trade. And I'm reluctant to even reference it as a trade because, again, we think it's kind of a secular change in the world monetary order. In many ways, it's kind of the other side of the bond vigilantes coin. Actually, Tom, you on the show a couple of months ago said, is the gold market sending us a signal? And it absolutely is, and it's the same signal the bond vigilantes are sending us. And unless, when you look at kind of G7, it's not just America, what's going on with long yields across the G7 nations, all of that really argues for gold as a safe haven. There's a lot of factors there at play, not the least of which, too, is I think a lot of the shine coming off the dollar. And we have obviously seen the dollar come off of a 12 or 13-year bull run. But the guest from Macquarie, Dr. Wiseman, I think summed it up very perfectly, where he talked about, dollars now moving from ordered liberty to managed chaos. And I think even that's part of people now looking at US dollars no longer as the safe haven that they once were and finding refuge in gold.
How about silver? I'm just looking at silver on my GLCL, Global Commodities Price chart here. Function on the Bloomberg Terminal. It's up 40% this year.
Silver is interesting because, silver, and the VanEck guys will tell you this, has always been kind of interesting because there's a more robust industrial use case there. And I think, in particular, if you look at the silver to gold ratio, which is, one of the dozens of indicators we look at, it was, comparatively undervalued relative to gold, historically. So there's kind of a technical basis there for an uplift. But I think also equally interesting is when you look at a lot of the Chinese demand for solar panels, which they've got Xi Jinping has big plans for solar. These are new types of solar panels that are going to use more silver going forward. So I think that industrial use case now also has a bit under it. But again, when silver and gold start moving in tandem like that, that's also the signal, that the bond vigilantes are sending us that this is inflation safe haven.
Seeing India, China, and Russia doing deals and having meetings is now normalized. We systemically drove them together, with wrong-headed policies for decades compounding. On the other side of this break, we will get further into some details about that very commentary, how it relates to both gold and silver looking backwards and to come with London's price discovery importance fading in the years and decade ahead. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Yeah, and I think since we've launched the SD Bullion IRA program, we've even gotten more insight into this industry.
Right.
And you start to see like the email, the unorganization, and things make sense of why things take so long. When you use the traditional three, separate entity model, nobody's doing checks and balances with each other.
And like you said, there's horror stories now that that people are reaching out like, hey, the depository says 4 years ago they didn't get this inventory, and it's like this is crazy, guys. Like compared to our facility, everything, literally every inch of this facility is under camera.
I hope you enjoyed this short clip from my recent conversation with SD Bullion founder Dr. Tyler Wall. If you're interested in opening a gold or silver retirement account, then this video is a must-see. The insights and strategies that we reveal have helped SD Bullion customers save hundreds of thousands, if not millions of dollars inside their gold and silver retirement accounts. After $5 billion in transactions with more than 400,000 customers, I assure you, this video might be the most important thing you do for your gold and silver future. Visit ira.sdbullion.com/video today. There, you'll be able to gain full access to the entire interview, and you'll also be able to watch more short clips from our conversation. That's ira.sdbullion.com/video. I hope to see you there.
The spot silver and gold markets were strong again this week. The spot gold price led the charge with a convincing close at $3,590 an ounce bid. The spot silver price closed just under 41 an ounce bid, while the spot gold silver ratio is still at a historically high level of 87. Now, considering the spot gold silver ratio, silver has lots of ketchup fuel in the tank, in other words. Speaking of silver, the team over at Metals Focus had a quality report this week on silver's busting into the $40 an ounce level, acknowledging the major silver bullion drain that has taken place out of London since 2021 onwards to now in present day September 2025. Something like 350 million ounces of silver upped and left London over the aforementioned 4 years. They also confirmed the vast majority of silver London fronts as if its available inventory is actually unsecured ETF silver spoken for. They have the current London silver float at 170 million ounces, so like a month and a half of current silver demand worldwide. So yeah, not much. In terms of potential silver out in major exchange warehouses, it's the COMEX that is now the silver gorilla hoard. But of course, most of that silver in most warehouses is spoken for and not available at these current price points. Metals Focus left the report bullish gold with further spillovers into silver, so bullish both into 2026. A bit of chart and data nerd news. Looks like London gold silver price fixers and their cherished data records, they're going on an email campaign looking to have industry data suppliers either pay them a boatload or unpublish their data. Now these are the same crowds of people who brought us nearly everyday global gold price riggings at the London AM price fix and the London PM price fixings for over 6 years running on this chart here. This one specifically gold. They did it too in silver. Many in Russia, China, and India also knew this, and judo stacked bullion increasingly mid-2000s onwards to now. You know, like candidate Donald Trump once said publicly in 2026, "We don't have the gold. Other places have the gold." But the Western world has a lot of levered derivatives, and I hope all those traders who sold this Western world out with their short-sighted gold and silver value suppression policies now realize what they have helped create. A Silk Road that is not putting up with our BS for much longer and closing in their ties. And while gold has barely gone up in price throughout COMEX trading hours since 1975, the Eastern world and other mostly emerging markets have ensured that gold is now being re-rated so sharply that 1 ounce of gold almost now affords 50 barrels of crude oil, as the once mighty fiat US petrodollar agreements come unraveled. This recent news out of London had me concerned, so I went back look at one of my favorite silver price charts for some study this week. And almost as in every time I look at this chart, it leaves me more confident in my ongoing thesis. You see, the Eastern silver price discovery hours, the pricing for silver on Eastern hours is now ballooned to $387.31 an ounce, but it's also flatlined of late. There was a similar move in the late 1990s and early 2000s, throughout the 2000s, where we saw not only flatlining but rolling over of the blue line back to the red spot price line and reconvergences. It was during those red and blue line reconvergings that spot silver did multiples in price action, and we are now threatening to rhyme in time. Now, full silver market backwardation has not yet returned. That is a situation when spot price is higher than every futures price quoted. But I'm thinking it's likely only a matter of time until it does happen again, given the precarious supply-demand situation in the modern world's physical fine silver market. This is the kind of phenomenon that could drive us to triple-digit silverlandia in little time. It is not a prerequisite that it has to happen for triple-digit silver, only a condition that would make it happen sooner than most might think is possible. The silver price cup is forming. Whether or not we break silver's old ancient nominal price high of 50 an ounce this year or in the years that come is not much in doubt now. What is surprising is just how under the radar silver is doing this at the moment, with so many reasons as to why it will likely perform multiples in real value terms in the years and decade ahead. Take advantage of silver and gold bullion deals this weekend. Visit sdbullion.com/deals for 1 ounce silver rounds at spot, American Gold Eagle coins only $50 an ounce over spot, and 90% constitutional silver coins priced at just over spot. That will be all for this week's SD Bullion Market Update, and as always to you out there, take good care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.